Hey guys, what is up? Fabio here. Hope you guys are all well and welcome to a new educational video, which is going to be all about market structure, combining the weekly, the daily and the 4-hour time frame. Before we dive in, if you have any questions whatsoever, make sure to join the Discord server. It's all free, link in the description down below. And without further ado, let's dive straight in. So what I always want to do when trading and when conducting multiple time frame analysis is I always want to start out on the weekly time frame, see what my range is going to be between which I'm going to be trading, so the week high and the weekly low. And from there onwards, I'll dive in towards the daily and then I'll dive in towards the 4 hours. So looking at the weekly time frame, what you can see on euro dollar, it's essentially a push up, a pullback, a push up, a pullback, and then of course another push up. And once we of course get that push up and see that break of structure occur over here on this high, because this is of course your structural high, then we expect a pullback to start occurring. So essentially what I know from just simple market structure and market analysis is that this is going to be my high, this is going to be my higher high, this is going to be my higher low, and I'm expecting a potential new higher low to be formed. So what I always want to be doing when we get a break of structure, as we for instance had over here on the weekly time frame, is that I want to start looking for when we can start anticipating on a daily pullback, because once we see that weekly break of structure initiated, we are going to be expecting a weekly pullback, right? Because when we see a trend occur and it moves like this, every single time when we see a break of structure, we get that pullback back down, because price is not going to be rising up in towards the highs forever. So how can we then anticipate and know and start understanding when is that pullback going to be coming? Well, that is simply by analyzing the daily time frame and the 4-hour time frame and trying to be there early and seeing those signs which are going to be telling you when we're going to see that pullback. So a pullback sign, for instance, on the daily time frame, and which told me that there was going to be a weekly pullback, essentially was by viewing this ascending wedge structure. So what I always know from general market structure, and you can check out my other videos on this topic, is that once you see ascending market structure, which is kind of squeezing in towards the highs, we can expect that push downwards. So if I focus on this specific price action, and we now look at daily market structure, what I essentially could see was a push up in towards the highs, a pullback, a push up, a pullback. This over here becomes the low because this is your swing high. This swing high, gets broken over here. Then this becomes your swing low. So we've got a high, a low, higher low, higher high, and then boom, after a 1, 2, 3, essentially the ascending wedge being matured, or the ascending wedge maturing, we then expect a pullback once this low over here gets broken. So that low gets broken, this then becomes your swing high. Then what happens? We see a pullback, this becomes your swing low, so we get a lower low over here. Then this becomes your swing high once again. From there we see that push downwards initiate, this low gets broken. So what is then going to be your lower high? Well, the highest point from where this low got broken, which is this point over here. So this now is your lower high, and let me just delete the other lines to make it a little bit more clear for you. This then becomes your low. Then what happens after a break of structure? What do we expect? Because of course in a downtrend, price is not going to just go down forever. Every single time when you get that break of structure, you can anticipate that there is going to be a pullback within the market. So what happens once we see a push and we see a break of structure over here? The market starts pulling back. This is your swing high over here. What we can see over here is that price wicks through that swing high but never breaks it, which means the bearish bias on the daily is always intact. Then boom, what happens over here? We see a push downwards, break of structure once again. What is then the swing high? This is the swing high, because this is the highest point from where this low over here got broken. Then what do? We focus on structure once again. What do we see? We see a pullback occur. Then once again, we see a break of structure occur. And from what point did that break of structure occur from? And what is the highest point from where we saw that break of structure occur from? That was over here. So this becomes your swing high, another push down. Then what happens? You're waiting for that next push downwards from, for instance, this area of supply within the market over here. As you can see, we get a reaction, but nothing happens. So why does nothing happen? Well, if we look at the weekly trading range, we go back towards that weekly time frame, what can we see? Well, what I like doing is drawing in a premium versus discount tool. then going back towards the daily time frame. And what do we then know? Well, over here, this last push in towards the downside is inside the discount. And what does that mean? Well, it means that we've seen a large pullback since the highs all the way down. And if we were to use, for instance, a Fibonacci, what you can then see is that this is a 0.786 fib retracement. So the 786 fib retracement is of course a good place to go long from. And essentially when we're so far down in price and we're so far down in towards the discount area, we're not expecting, or the chance, and the probability of us once again heading down lower is of course smaller than, for instance, when we're trading inside the premium and trading at higher levels once the pullback over here just started initiating. So then what happens? As you guys can see, we see a push in towards the highs again. Then we see a pullback, push up. I remember the lowest point from where we saw that break of structure occur, that becomes your swing low. So that low over there becomes your swing low, or your higher low, of course. This becomes your higher high, higher high, higher low, then higher high. Then once again, what are you expecting? Well, essentially, if you use a Fibonacci once again, draw it in here from the swing low towards the swing high, what you can see is a nice reaction from that 618. Furthermore, as well over here at the time, we had some demand located. As you can see, a reaction in the form of this wick in demand, but then demand fails to push price up higher. What happens? Supply comes through over here. So that area of supply is stronger than this area of demand. The market pushes back down again. So this area of demand holds. Market moves in towards this area of demand over here. And what you'll probably see is a mini downtrend again initiated over here. And this is going to be a 4-hour downtrend. So let's focus on the 4-hour. And what you'll see over there is that if you focus on the 4-hour time frame, what you'll see is that this over here was a low. This low over here on the 4-hour got broken over here, which means the daily was bullish and the daily indeed tapped in towards that area of liquidity, which was formed over there. However, the 4-hour trend was against your daily long. So that means essentially that the probability of your trade is going to decrease. So what happens? The 4-hour is bearish. As you can see, push down, push back up. Then what we had over here was daily supply stacked with a 4-hour area of supply. From there, the market starts dropping again. So what happens? Let me just clean up the chart a bit. What you'll see is this high, this low, lower high, lower low, lower high, lower low, lower high, and then boom. Price crashes with that 4-hour trend all the way back in towards the downside. So now focusing on that daily market structure, once again, what you'll see is a push down, a pullback, a push down, a pullback, a push down, a pullback, and then eventually a push down lower than that weekly structure area. And then what does that mean? Well, it means that the weekly has flipped bearish, and then the daily essentially has also flipped bearish. So what happens once this low over here gets broken, the highest point from where that pullback initiated now becomes your swing high. That is now this point over here. And essentially, once this break of structure occurs, you start expecting and anticipating that at some point in time, after that weekly break of structure and that daily break of structure, there is going to be a pullback before that downtrend on the daily once again starts continuing back down in towards the downside. So that is essentially it. That's how I read the market essentially. As you guys could see over here, this was an example of why price failed. So because the 4-hour trend went against the daily and the weekly trend, you could see that this daily setup didn't play out. So by stacking the confluences and by looking for setups which are in line with the 4-hour, the daily and the weekly, you'll see that the probability of those setups would just be so much more high. So yeah guys, I hope you guys enjoy this video, especially for you guys. I chose this light screen, got some requests for it. So yeah, I hope if you guys liked it, just leave a like and tell me to use this screen layout once again, and then I will do so. So yeah, thanks once again for joining in, and I'll speak to you guys later. Thanks guys.